Whole life insurance agents are the scum of the earth.
Whole life policies suck.
Whole life insurance is also a big scam.
Sounds like a get-rich-quick scheme.
Yes, thank you. You will get rich quick. We all will.
Since I am a whole life insurance expert, you probably are going to assume that I am going to disagree with Dave Ramsey. Wrong. I am here today to tell you exactly why life insurance agents are scammy and screw you over. That way you are not this guy right here. I'm going to show you 3 ways that life insurance agents screw you over, and if you stay to the end, I'm going to show you a bonus policy on how you're getting screwed over. The first way life insurance agents are trying to screw you over is that they're just trying to sell you life insurance. The day of slimy sales agents trying to convince you to buy something you aren't ready to buy should be outright illegal. If by the end of the sales conversation you're not asking yourself, what are the next steps? Or if in your mind this isn't something that you definitely want, then maybe it's just not the right time for you to buy. Maybe you just need more time. Maybe you just need more education. Maybe it's just not the right time for you in general. Whatever the reason is, you should be able to say, yes, I want that. Maybe your dog died. Maybe your roof just fell in. Maybe you're moving. I don't know. It could be anything. Regardless, everybody's buying cycle is different and you have to be ready when you're ready to buy. The second way that life insurance agents can be screwing you over is they just be overhyping things. Now I'm a fan of overfunded whole life insurance, just like some are of their favorite sports team.
Into foul territory, and he bumps a fan in the process. Ichiro apologizing to her, and she's like, oh my God.
But some people in the space, I'm not gonna mention any names, but if they're a hard left-winger IBCer, which stands for infinite banking, or some IUL agents, like I said, not gonna mention any names, either are overhyping, over-fabricating, using marketing tactics, or are flat out lying just about how the product works in general. Or are flat out lying about the truth of how the function of life insurance works. The third way is high commissions. Money, money, money. High commissions to the agents means low cash value to you. When structuring a policy, you want to make sure that there's all the bells and whistles to making sure that the cash is being supercharged, which consequently then allows you to be your greatest asset. If not, the agent makes bank, and what are you left with? Well, not cash, I'll tell you that much. You are left with death insurance. With that being said, since you made it to the end, let me show you a bonus clip looking at the numbers. And reason number 3 and why I said that whole life insurance agents are screwing you over is I said it due to the sheer fact of commissions. And I'm going to share with you 2 separate policies that is going to show you design and compare those designs to the actual commission amounts that insurance agents get based off of each design. So the main thing that I shared was in the policy that screws you over, you have no cash value, which means that the insurance agents are getting more commissions. So you'll see here, this column here is going to be total cash value. Okay, so here I have 0 the first year, 0 the second year. And you can scroll over here and you can see the years for the amount. This is for a 39-year-old male looking at a $10,000 year policy. So we put $10,000 into the policy. After I put $10,000 in year 1, I have $0. Year 2, I have $0. Year 3, I finally have some type of dollar amount of cash value that's going to my policy. So essentially, I put in $30,000 in the policy. I have $5,000, and I have a $700,000 death benefit. And so when people like Dave Ramsey talk about why insurance, whole life insurance is really a scam, this is the reason why. It's just because he's specifically talking about no cash value, the death benefit doesn't grow, and you would have been better off just paying term insurance to get way more death benefit. If I would have paid $10,000, how much death benefit I got? Probably millions of dollars of death benefit. So in this instance, he's looking at it from the standpoint of no cash value, terrible way to save your money. And when I look at this policy and I say, well, when do I finally have more cash into this policy than I put into it? And it's about 12 years. So I have $122,000 of cash. I put $120,000 in. By my barometer, I would actually agree with Dave Ramsey. So at the very beginning of the video, I said I agree with Dave Ramsey. Well, this is exactly why I agree with him. I agree when a policy is specifically designed like this is not a great place to store capital by any means for that exact specific reason. Some agents design their policies this way specifically. This is their practice, so on and so forth. If that's them, that's perfectly fine. You may want to work with them because the death benefit for a permanent death benefit, long periods of time, that's the reason why. But if you're looking at strictly from a cash value perspective, That is not something that you want to get set up with. And a lot of times I find that the world of insurance, people come to the insurance agents and say, hey, this is what I want. And they still design it this way because there's still a cash value piece, which is why I believe that some insurance agents are scammy. Because if I'm coming to you as an insurance agent, I say, hey, this is what I want. I want high cash value. I want it to perform where I can borrow against and use it for other things. I want it early on. I want early cash value. But then you design it this way. Well, when you're a client or a consumer and you actually submit to a policy like this and you make your policy payments, if you actually have a policy like this in year 2, you make this $10,000 payment, again, you've put $20,000 and have no money. There's no way to get that money back, which to me, that's morally unethical. And that's just not a great way to do business as a whole. So this person here that would design this agent that would design this, the total amount that they're going to make is $10,000. Like that is actually their commission that's coming to them. I'm going to now compare to you or share with you and compare how a different policy looks from a number standpoint and what an asset or overfunded whole life insurance policy would look like, and then what that person would get paid. So you come over here, same exact everything from a standpoint of age 39, total dollars that is going into the policy, $10,000. And you'll see that the amount of cash value in the first year is around $8,000 almost due to zero. And then in the year 2, there's $16,639, almost $17,000 versus zero going in the second year and the previous one. You'll see the death benefit is a whole lot smaller, but you also see that it increases over time as well. The reason the death benefit is so much smaller is due to the fact that what we did was we minimized the death benefit to maximize the cash. The smaller you make the death benefit, the more cash value you have in the policy. So we minimized this as much as we possibly could so we could have as much cash as we possibly can. In the other instance, we had a ton of death benefit, but no cash. So it's just have to think of what is the goal, which comes back to the second point of how agents are trying to screw you over. They should be able to ask the questions of, hey, what is it that you want? And then you should be able to say, hey, I want this because I want it for the cash value piece of it. I want high liquidity earlier on. I know why I want it and I want it. So please, now can I have it? You're asking for it because you understand how the functionality of it works. You'll see that I have all of your money back in regards to when I put it in. It's close between almost year 5. So you have about $49,626. You put in $50,000. And it took about between 5 and 6 years. Year 6, you officially have $62,030. The total payment commission for an agent in this scenario is about $1,800. Okay. So scenario 1, you have no cash value. Your break-even point, you have more cash than you put into it is year 12, higher death benefit. The commission to the agent is $10,000. Scenario number 2, you have way more cash value. Your policy breaks even way sooner, half the time, and the agent gets paid less. And so that right there is exactly why agents have the ability to screw you over if you're not working with an agent who knows exactly how to design these policies the exact way that you're looking for. So with that being said, go out there, do your research, find the agent that you want to work with, make sure that they know what they're doing, make sure they know what you're talking about. And until next time.